So the R word, recession. It's dominating most headlines these days. What are your
Mhm.
thoughts? Are we in one in Canada? Are we going to face one?
I don't think we're in one yet when we look at the economic indicators, but I think it's unlikely that we will avoid one in 2023. We have the odds at about 70 to 80%, so 3 out of 4. So that's for Canada, that's for the US, that's also for the world. And just as you mentioned, the World Bank came out with their forecast for 2023. And remember that the global economy rarely contracts. It happened in 2008, but economists tend to have, an agreement that the threshold for a recession is growth, global growth below 2.5%, and the World Bank is forecasting 1.7% in 2023. So de facto, the base case for the World Bank is that a recession is upon us in 2023 for the world economy.
Like typically when you have a recession, it means job losses. And yet our job market is pretty resilient, Sebastian. In fact, we surprised to the upside with job growth in December. Could that change?
That could change, but we do think that the base case is that we'll have a recession, as I said, but a shallow one, maybe one where it's a job full recession, or let's say that the bar is very high for businesses to go with massive layoffs. So, of course, we should expect the unemployment rates to go up slightly in 2023 if we do go into the recession scenario. But maybe it's going to be a recession that's not going to be, remembered through history as a painful one. Maybe it's just, a period where growth was elusive, and on multiple fronts, wherever you look at the economic indicators, that's what you see: elusive growths, not a sign, not signs that the economy is crumbling here.
So let's talk about some of the other key economic indicators and just the impact that inflation is having, like business investment and also retail sales, right? Because we know the spending power for consumers has deteriorated
Mhm.
pretty much across the board, but certainly a lot of people feel it more, more than others. What
Mhm.
is it telling you? And I know we do have a chart on weekly average earnings.
Yeah, sure. So the spending power has been eroded quite a bit, and here what we see on screen is the real average weekly earnings in Canada. The same chart could have been produced in the US. Just shows that inflation is growing at a faster pace than wages. So people are getting less and less rich as we move forward. So there's a loss of spending power. And when rates are rising quickly, that means that home prices fall. So there's a negative wealth effect there. So that's a huge part of the recession call for 2023. Households being willing and able to spend less. So that's for the consumer. As you mentioned, businesses also, their capex plans, their intentions to invest are falling. Interest rates are rising, so the access to capital is more expensive. So you have all of these factors working together to paint a picture. Well, the way we will frame it is we're asking the question, where will growth come from in 2023? And it's very hard to pinpoint something that could produce strong growth.
Now we only have a minute till commercial break. Does this mean, Sebastian, that there is a growing risk for policy mistake? Because Tiff Macklin, I mean, he's very laser focused on controlling inflation. There's obviously a knock-on effect with business investment and retail sales that last a bit longer. So should they be approaching this differently now?
Well, it depends how you define policy mistake. I think the mistake would be to pivot too soon, to start cutting rates too soon, and maybe have another bout of inflation like we had in the late 1970s. So maybe what will seem like a mistake for some if the economy deteriorates further in 2023, in the long run will have been the right thing. So let's say the advice to the Bank of Canada and to the Fed is when you fight inflation, you need to fight it to the end. That's what history tells us. So if we need to sacrifice some growth in the short run, I think in the end, we will win.
Okay, we'll take a quick break and we'll continue this conversation. Stay with us.